Felix here, guys, and we're talking Palantir. We're going to cover two things. One, price for next week. We're going to look at the technicals. We're going to see why next week really is such a crucial time for the stock. And secondly, we're actually going to look at the fundamental valuation and where you can download that for yourself. Now, as always, guys, it's not financial advice. This is just for entertainment only. So let's get straight to it. Let's have a quick look here at some, a little bit what happened last week on Friday. You can see here all the big red stuff is basically the tech stuff, right? Pretty much everything techie went down. Amazon, Apple, or even those kind of more value stocks went down quite a lot. You can also see here, can you see that? Yes, I think you can. On the right, can you see the end of that chart? No, you can't. All right, let me move it over a little bit. Okay, can you see here, right below my enormous image, you can see the little blue line. That's the New York Stock Exchange, and the little orange line below the NASDAQ. And basically the NASDAQ at the end of the day takes a nosedive, and there's this net inflow of cash. So basically cash leaving the NASDAQ and it is going into the New York Stock Exchange. What does that mean? It's basically money flowing from techie stuff to kind of banking type stuff. And again, you can see that over here. The green bars here in the middle, that's all banks. That's JP Morgan, Bank of America, all those guys. So that's what's happening. Why? Well, it's kind of people fleeing tech for value, and that is kind of what you see when people are a little bit concerned. Why are they concerned? Well, let me show you. This is why they're concerned. They're looking at the 10-year Treasury yield curve, and people get very excited about this. And I just wanted to show you this in a little bit of historic perspective. So we are here, right? We are right there where my big pink arrow is. And you can see where we've been over the years. This is beginning of 2020, we were at 1.9, almost 2. And then all the previous years, we were basically always higher. So why are people so worried about these few upticks of this curve? Well, what they're actually worried about, I think, is not the level. I don't think anyone's saying 1.54% yield is doom and gloom, the end of the world, interest rates are rising. I really don't think that is the concern. What is the concern is that since it's been going up, it was kind of going up at this sort of trajectory here. Now, since sort of early February, it's going up at that trajectory here. And you keep going with that. If you're a bit of a doom and gloomer, then, that takes you up to, by June at that rate, you're up to 3%. And that's, of course, a very substantial increase. Now, do I think that's going to happen? No, actually, I don't. I do think it's going to continue to increase somewhat, but I don't think it's going to continue to increase at this particular rate. Why? Because I just don't think inflation's coming. I just don't think there will be any. I don't think governments printing money causes inflation in any way, shape, or form. However, we are not going to get into that rabbit hole, because then we'll still be here in 3 hours' time, and you'll be rather sad that you joined this particular video, guys. So let's look at the actual chart. Now, as always, guys, for every one of your likes, I donate 1 cent to the gentleman here, all these fluffy creatures, these sanctuaries in California, Tennessee, and Missouri, I believe they are, and they do a fantastic job there. Guys, we donated $308 for February, so let's make it $500 for this month, and all you have to do is smash that like button, guys. Of course, it does also help us spread our Palantir good news here. So here is the actual stock. Let me get rid of the line and make this a sensible chart again. Now, let me zoom in a little bit here, guys, so we can see. Where is our zoom? Here is our zoom. Zoom. Okay, it doesn't want to zoom. Now it wants to zoom. Excellent. So what's going on here? Well, let's go in a little bit further still. The stock it doesn't want us to look at the detail. It just wants us to look at the headlines. Well, we are going to look at the detail, guys. We also got our 100-day average line. Yes, fantastic. So this is untouched as it was, basically. And I can get rid of these two here. We put in this pink line here. And that was basically illustrating that each day the lows were higher. And if you're on a small screen, guys, I magnify stuff for you as we talk, go through it. You can see it doesn't actually, I sort of drew in rather roughly here from this very low point. But each day you can see the little tail of those bars were higher. And what does that mean? It means the lowest point on those days was higher than the previous day. And that's a good thing. That's what you want. Now, yesterday, Friday, I should say, you can see that the low point was actually a little bit lower, but we still managed to end up on a high right here. We ended right at the high of the day, and that is actually slightly above the high the previous day. So for me, that is still a very nice trajectory. Now, what I'm going to do is I'm going to delete this line, and I'm going to connect this into a little bit of a channel. So what do you do with this? You basically connect the low points approximately, and then the high points, and you get this nice little trajectory chart. So this is the chart that we are currently, this channel that we are currently moving in, and that's of course a really lovely recovery play. Now, is it going to continue? Well, the one thing that has me slightly concerned is that down here at the bottom, you can see volume. And you can see the last 3 days, volume was declining, where I'm putting this line in. And I don't like to see that. When you have a rally, you want your volume to be steady, or if possible, going up day by day. If it is going down day by day, it basically indicates to you this rally is coming to an end. It doesn't mean it's going to crash, but it just means that it's coming to an end and it might move a bit more sideways. So that is actually what we saw yesterday. Also, we moved, even though we are slightly up 0.7%, we moved sideways. Now, moving 0.7% up when the whole tech market is red is, of course, something that has me feeling more bullish on Palantir. And I should, for disclosure, say I am long Palantir. But where is it taking us? So let's look at some indicators, and we will then look at, we're going to round this up with the key price points to watch out for come Monday and the coming days. So the first thing we're going to look at is a Williams R indicator, and that basically shows momentum. And the way that works is that when you cross here the 50-point line, where I just put this blue line here, when you cross that line from below through above, it gives you a buy signal. When it goes down, it does the opposite. And just to give you a thought here, if you had sold when it given you a buy signal, you would have sold at about $38. And so you could, I don't need to explain, but that would have been a good point to get at. But now it's giving us a buy signal here on I'd say at the end of the 10th of March. Whoops, let me get this one in here. There we go. You can see my line is slightly off, but for the purpose of this, it's fine. It's just the software doesn't allow you to put it precisely. But basically, it's the end of that day of the 10th of March. So that gave us a buy signal, and then that's a positive. And that story continues because we are still up here. Now, this area we are up here, above this dotted, this long kind of dashed line, is what we call the overbought area. And what does that mean? Does that mean it's going to come crashing down again? Not necessarily. You can be in the overbought area for quite some time. For example, look at this period here in late November. And again, I'll magnify that for you guys. You can see that was quite a long period. We were in this overbought territory, and we were very happy there. However, when you do get, and I'm going to put another line in here because we can compare the last time we were at that level. The last time we were at that level was 22nd of January, and then we sort of fell through it after that weekend, and then that gave us it ended up going down, and then at the 50 point here, it became a sell signal, and then we went down, and then we recovered again. That's how stocks move, right? Essentially, they zigzag their way about, and actually it's good to zigzag because every zag gives you a new support line. So when you do sell off, it happens at a slower pace than if you just fly up, and that's a little bit the explanation for what we saw here. Of course, there were some real world factors too with the insider sales and all sort of stuff. But if you get this kind of buy trajectory up like that without any stops, I would have preferred it to do this because then for each one of these lines here, you would have gotten some support, but we didn't. So it didn't happen. And then what it means is that when you come crashing down, you do it at the same speed that you went up. So zigzags are a good thing, guys. You don't really want 10% price movements in a day in a stock. Of course, it's lovely when you are there. I mean, I also enjoy it, but it indicates to you, well, this thing can also come down 10% in another day. So so this is still a positive momentum. Yes, it is overbought, but to me that doesn't really mean anything. You can be in an overbought land for quite some time. So we are still here on a positive momentum from that point of view. Now let's look at MACD. Those two are quite a nice pair. So I always like to look at them together. They look at things a little bit differently. And again, here we get a buy signal again on the 11th of March. And you can see that down here. When that blue line crosses through the orange line, the MACD line, it gives you a buy indicator. And again, if you want to see, well, how does this work? Well, for example, on the 21st of January, we got a buy signal here, and that was at $26. We got a sell signal around about the 4th of February. That was at, what is that, $33. And then we got another buy here at 37, and then it got us out again at it basically got us out just before that massive sell-off. So it has been a fairly good indicator for Palantir. It tends to be for all stocks. The only thing with MACD is it lags a little bit. So I normally think it is a little bit slow, possibly a day or so for most stocks. So that's the only caveat there. But this is looking very nice. And you can see those two little green bars here. They're getting bigger. That means momentum volume is actually improving. So far, so good, right? So the only caveat here so far, guys, is watch out for volume down here where my little pink bar is here, or is that purple, whatever that is, that one there. Watch out for that. If volume is low on Monday, it'll be hard to keep these gains, and we might see a little bit of a dip. Now, if we dip, how far will we dip? Well, there are a couple of points in here. So I'm going to put a couple of lines in here, and I'll tell you exactly what there are. So for one thing, of course, yesterday's low, Friday's low, is a support level. Not the strongest, but it's sort of a 25.17 or thereabouts. And then the 2 days before that is actually quite a nice support level, and that's at 24.22. Why is that a nice support level? Because we've hit that point twice. Once, and then twice here where I'm pointing my arrow, my mouse cursor rather. So you can see it's a double support. Double supports are better. In fact, it's kind of close to a third one over here. Depends how back far you want to go. In fact, maybe even fourth. So that's a pretty good support line there at 24.22. We also had some support in around that 23. What is that here? Maybe this one needs to be just a little bit lower. Sometimes with these lines, it's a little bit fat. It doesn't, so don't watch out for by the cent. You know, it varies a little bit cent by cent, but you can see again, that's another support line. You're thinking, why is he putting as many support lines? We're going to go up. We're going to go up. Yeah, but let's just go through the motions of it. So you can see here again, that was a support line there, and then we touched again on that point there. And each time you do that, each time your price drops and then rallies back up to that point, basically gives you a support. And if you do it 2 or 3 or 4 times, even better. The more the merrier, really. The reason I'm drawing this in, because Fibonacci, guys, the only support Fibonacci gives us is 20.18. And I really don't want us to go to 20.18. I think we've suffered enough. So we are, well, there is, of course, also the 26.04. But I'm just saying, if we do fall off a little bit on Monday, and the only reason we might do that is because of the whole 10-year bond yield saga, just money generally flying out of tech stocks indiscriminately from the good and the bad, and so that can make that happen. So if we fall $1 or so, then we are basically in free fall to 20, and that's what I don't think that is actually the truth, and therefore I put in these points here. You can see them here in blue. Now on the way up, what is our resistance? Well, actually yesterday's high, which is exactly where we ended up, is a resistance point, very much so, because we've actually hit that point more or less twice before here at the bottom of those days, and you know, your points down on the way up become your supports become your resistance. So that's kind of how the psychology of this works. Above that, you have here just very singular resistance lines, which are not very strong, and that's actually a good thing on the way up. And you have them here. Let me put in some tags again, guys, so you can see them. So these on the way up here or thereabouts are resistance lines on the way up. So if we crash through basically 27.50, then we have a very good chance of working our way up to, let me just get another one of these little flags here. We've got one here. Very good chance of working our way up to about 29.64. That would be the next real kind of cap. So essentially, if we start Monday off on a green footing and the market doesn't crash the whole tech sector, at least temporarily. I mean, I'm using the word crash here fairly loosely. I don't think it's going to really crash it, but it might be a few percentage points corrections because of this bond yield saga, which people don't seem to be able to let go of. Provided that doesn't happen, we have a very good chance of getting pretty close to $30. So 29.64 or 66 will be our real resistance there at the top. Should the market turn sour somewhat, and momentum, remember, momentum is on our side with this stock. All the indicators are pointing up. The only thing that has me slightly concerned is the volume down here. So basically you want to watch out for what's volume. Have a look at what's volume pre-market on Monday. There are websites, for example, like what is it? Market Chameleon, I think that's the website, marketchameleon.com. There you can see pre-market, the actual volume. You can compare it to previous days. Make a bit of a note of that, and then you kind of get a feel for how much bullishness is there in this pre-market? Because if it's only a few 100,000 shares, it doesn't really matter much. They'll give you a feel for it. Yesterday, the volume, or Friday rather, was 58 million. The day before was 84 million. The day before that was 100 million. So if you get a million shares traded in the morning, that's kind of like, well, that's a percent of what the day is going to happen. It doesn't really mean very mumuch. So pre-market there, take it with a bit of a pinch of salt, or a handful of salt, really. What matters is once the market opens, where it goes. So I would watch out for those points, guys. On the way down, 26, 25, 17, 24, 22. Hopefully we don't have to look any further than that, and then it's going to go up. And quite frankly, if it does go down a little bit, I don't particularly panic with these things. You might see it go down and retest some of that level, maybe the 24, 22, and then we might zigzag our way up slowly through these resistance lines, and then we have this sort of pattern. And actually that's better, because it just gives us stronger support lines. So when there is a general market shakeup for no particular reasons that are related to Palantir, then Palantir does better. And actually, this sort of zigzagging we've had the last 2 weeks here or so, a week or so, has actually been good. And we've seen the value of this zigzag up and down, because we have actually had green days when the market, generally speaking, hasn't in the tech sector. So that has me fairly hopeful. Now, as always, guys, all the advice comes from our goat friend here, our mascot. So please smash that like button, and also just subscribe, and you guys get more of these videos. I probably make 3 to 4 to 5 videos a day on everything exciting, Palantir and otherwise, technicals, news, everything basically is happening. And also join us for the lives, guys, so do that. And lastly, but not least, on our Patreon, you can get my 10-year discounted cash flow model for the Palantir stock. And you can see I have a fair value here at 83.50. Now, you might wonder, how on earth does this chap get to that? Well, it's essentially a very simple equation. It's a part of two things. One is growth of revenue. So this is revenue, the bold line, and the long line below is percentages. And then it's EBITDA, which is basically profit, and then the margins. And I have done, I like to think, a fairly conservative take on this. So for this year, we know growth is 30%. I'm assuming for the year after also. And then I'm kind of reducing growth. Why am I doing that? Well, I kind of want to build a not too bullish case, because otherwise I just jump up and down with joy every day with Palantir. So I think it's fantastic. I think it is a fantastic company, but I think it's good to kind of like build in some stuff that isn't such great news. So I get by 2030 a revenue of 9.6 billion. Most of the analysts' models I've looked at have us at sort of 11 or 12 billion. So, for example, if I changed it to that, and the way I could do that is by increasing here the margin. So the percentage increase, say I got us to, I don't know, say 35% growth in that year, it would get us to about where most of the analysts have us. That would get us to a fair value of $96. I'm going to take it back to that. Similarly with margins. So I have us here this year 10%, and then I'm going up to sort of 20%, where software companies should be at least. And then I put into a couple of bad years for no particular reason, just something terrifically unpleasant happening, and then we sort of recover to 20%. Now, if you were of the view that actually, you know what, the guys, they're going to have a 50% margin, then that would of course lift your fair value up there. So I encourage you guys to play around with these. Actually, for all stocks, I very much encourage people to play around with stocks. You can see when I did this, we were at $28 and catching falling knives. So do check that out, guys. It's on our Patreon, and we also have a group on our Discord dedicated to Palantir, with loyal and happy Palantir fans sharing news, not just shouting up, and diamond hands and that sort of nonsense. No, actually, we share real news, and we discuss things, and we disagree with things, and it's a very nice supportive community. And when stocks fall, it becomes a sort of Palantir Anonymous, which is also quite nice. A little support group where we're all thinking, oh my God, what's happening here? And basically telling one another, hold and don't sell this, because it's actually fundamentally a good company that will compound in the long run. And we've got not just the Amazon deal, we had the IBM deal before that. We had the massive auto component supplier there, the French guys, who were the 9th largest auto component supplier in the world, with 110,000 staff in 200 sites around the world, now using Palantir software for everything. So I think that again is a great opening into a whole sector, because the automotive sector is a huge supply chain headache because they use thousands of parts from hundreds of suppliers from all over the world, and all has to get there just in time. It's an absolutely logistic nightmare. So obviously big data and AI could do that a lot better. It could certainly assist people a great amount, both in finding efficiency and also just doing stuff better and more cheaply, guys. So that's the end of my Palantir rant, guys. If you enjoy these videos, I'd love it if you just hit that subscribe button. It would absolutely make my day. So thank you very much for tuning in, and see you in the next video.